So when you're applying for a loan, whether you're doing a purchase or refinance, the lender's always going to ask for really 3 different types of documents. So you've got your income docs, identifying documents, and then your mortgage docs. And a lot of times there's also assets in there, so we'll call it 4. With your income docs, it really depends on how you're paid. If you're W-2'd, they're going to want to see about a month worth of pay stubs, and then they're also going to want to see between 1 and 2 years of W-2s. If you're self-employed, then they're going to want to see 2 years of taxes, or if you haven't filed your most recent taxes, then it's going to be 1 year of taxes and then a profit and loss. Let's say you're 1099, you're an independent contractor. They're also going to want to see your taxes. This is just federal. You don't usually have to do state taxes. I've never heard of them asking for it. They'll want to see 1099s, 2 years, and then tax returns, and same thing. If you haven't filed for the current year and we're pretty far into the year, they're going to want to see a P&L as well. If your accountant charges a lot of money, you could always go online and build out a P&L. There's tons of different programs that you can do it for free. If you're retired, they're going to want to see your Social Security awards letter or your most recent quarterly retirement statement. And then if you're getting any child support, alimony, a lot of times they're going to want to see the divorce decree so they can figure out exactly how much you're bringing in, and then bank statements to show that money is coming through into your bank account. Usually it's the same way with retirement. They'll want to see those bank statements as well. If you have rental property, tax returns are usually the go-to. Unless it's a new property, then they're going to want to see the lease agreement and a lot of times the deposit, that, first month's deposit. If, let's say, you don't show a lot on your taxes and you want to go the bank statement route, then a lot of times they're going to need 12 to 24 months of bank statements. Lenders will allow like 3 months of bank statements, but usually the interest rates are a little bit higher because it's more risky for them. That's your income documents. Then you have your identifying documents. This one's usually pretty simple. It's photo ID, so it could be a driver's license, passport. Usually those are the 2 big ones. And then you have your mortgage documents. So any properties that you currently own, they're going to want mortgage statements, first and seconds, or HELOC statements if you have them. They're going to want your homeowner's insurance. So if you have an HOA, then sometimes they have their own master policy. They're going to want the master policy. A lot of times you'll have like your own individual insurance plan that's not part of the HOA. It's called walls in coverage. So they'll want that policy as well. And then if you're just a normal single family residence, they'll want a copy of that insurance declarations page. It should be in there if you go on your website. Pretty easy to find. Otherwise, you can always call your agent and they can get that for you. One big thing is you also want to ask your loan officer to see if they can shop your insurance policies. So you always want to see if they can lower your policy premiums as well as your deductible. Besides the mortgage documents, let's say you own a piece of property that's way out in the middle of nowhere. You could always get a tax statement, property tax document, or your annual tax bill. You can send that in. As far as rental agreements, usually they're going to look at those if you have rental properties. Always make sure you try to get your documents in as fast as possible. If you have to piecemeal a few of them, it's not a big deal. A lot of times your loan officer could actually call and get a lot of those documents for you. Whether it's taxes, if they need to call your accountant, give them the phone number, right? If they need to get insurance information, give them your insurance company's information. They can call and they can request that. They'll send over what's called a borrower's authorization. So if there's anything that you can't find, don't hold up your file for that. Get over everything that you can as quickly as possible. The loan officer can at least get started on working on your file. They can start running the numbers, figuring out what the best program is. And then if you need help, talk to them about it. There's no reason that they can't help find those different documents. If they have to come over and dig through paperwork, a good loan officer will if they care. And the sooner that you can get your documents over to your loan officer, the sooner they can get to work on figuring out exactly what your options are. I typically try to get my clients, if I have the conversation with them today, I want you to send me the documents within the next couple hours. Create a sense of urgency, especially if you're a realtor, if you're a loan officer, or either client. You want to make sure that you set the stage for how quickly you're going to move through this process. If your loan officer says, yeah, send them to me whenever, send them that night. If you get them that night, then there should be an expectation that, okay, you know what? I did my part. Now it's time for you to do your part. If you take 2 weeks to send over your pay stubs or any of your income stuff or any of your documents in general, then you've kind of set the tone with your loan officer and your realtor that you're not super serious about moving forward fast. If you send over your items very quickly and now your loan officer is taking forever and he's not getting back to you, then you know it's time to move on. It's time to find someone that can get it done at the speed that you're working at. And when you're trying to purchase a home, or even if you're doing a refinance, speed is everything, because the market changes sometimes multiple times a day, right? Rates could jump up, they could drop down. There can be a quick spike where they jump and then they drop that same day. Getting your part done as quickly as possible is super important, but also be on top of your agent. If they're lackluster about it and they're taking 3 days to even get you a response, swap them out as quickly as possible, because you want someone who's going to be aggressive and on it, because if that's how they are with you, then that's usually how they are with the lender or the underwriters. They're not pushing them to get you a clear to close as quickly as possible. So in this business, speed is everything.